Hi there folks, welcome to this week's weekly Forex Forecast, Monday the 25th of April. Okay, so now China's going into lockdown. Across the globe we're seeing stock markets under pressure. Oil prices are lower today, down around 5%. You've seen commodity prices in general are lower today, so it's definitely a case of risk off in the markets. Quite a quiet week in terms of economic data releases, but we are seeing continuation of that strong US dollar theme. Often when you see this risk-off environment that you're seeing at the moment, there's a flight to safety into currencies like the US dollar, the safe haven currencies. Also, interesting enough, we're seeing the Japanese yen. Japanese yen has been really soft for the last month or so because of the yield differential. Japanese yen is kicking off this week in strong positive territory. We'll see if that continues for the week. All right, let's have a quick look then at what we're looking at this week. Now, in order to access this weekly Forex Forecast, head over to the ForexSignals.com website. If you scroll right down to the bottom, you'll see all our menu with all our bells and whistles. Click on Forex Forecast and up will come this landing page. If you want to get this sent directly to your email inbox, just pop your details in there. We'll send it to you the moment that it has been released. Alternatively, of course, you can just get it here from the website. Okay, so let's have a look. This week I am looking at a trade in the euro against the British pound. We've had 5 consecutive days now of strength in that currency pair. We've broken through a key level of resistance. Now the path of least resistance is clearly to the upside. So we're looking at that basically pushing up further there. Head over to the forecast. You can read more about it there. Max, he's looking at natural gas this week. He's got a target of 7.5. He's bullish of natural gas. We're having this pullback into this supply demand zone, and I think that's why he's looking at that for continuation higher. As always, Shane does us a very useful weekly overview, goes through each day, day by day, giving you an insight to what is out and what the likely impacts are going to be on the markets. So well worth checking this out. I think this really is a cool place to start your week. Ahead of the trading week, having a look at this Forex forecast to see what it is all about. Right, we'll now jump onto the screens, have a look at some charts and look at the economic calendar for the week ahead. Come on, let's go. Okay, so let's start off by looking at the faithful momentum meter. Now this meter basically tells me what currencies are currently trading strong, currencies that are being bought, against which currencies that are trading weak, therefore currencies that are being sold. Now, of course, it doesn't predict the future. It is a lagging indicator. The way I had this coded many years ago was basically to flatten out the moving average to a horizontal line. So this line here in the middle, it's basically, in this case, it's the 20 moving average. So any currency here you see, like this white one down here, this is the British pound. You can see the key here on the left. This distance here is the distance between the 20 moving average against the US dollar. So at the moment, if you look at the chart on what is this? This is a 4-hour chart. You'll see that the pound is below the 20 moving average. And you'll see that quite clearly there. So at the moment, we're seeing some strength coming into the Japanese yen. The Japanese yen has been weak for about 3 or 4 weeks now as the yield differential plays out between the US bonds and the Japanese bonds. Big yield differential there. So the Japanese yen has been weak. However, this week, in fact, really beginning midweek, I would say, we saw this sort of V-shaped recovery here in the yen. Basically about this day last week. So the yen has been pushing on a bit of a bid. So now the yen is getting strong. I think there's a safe haven flow into the Japanese yen, low yielding currencies. It's a funding currency. One of the reasons why that is pushing high is because you're seeing the stock markets all tumbling across the globe at the moment. And also I'm no doubt seeing some profit taking as well with all those traders that have been buying the yen crosses recently. That's buying the base currency, buying the first currency and selling the yen. There's definitely a reversal going around there at the moment. So the yen is kicking off this week in positive territory. You're seeing the US dollar, this green line here. That's also a strong currency. That's edging higher. Again, the flight to safety. Stock markets are tumbling. Always we see a flight to safety when that happens into the greenback. And also, as I mentioned a moment ago, you're seeing that big yield differential. 10-year bond yields up there almost at 3% in the US, and 10-year yields in Japan at around 0.25 basis points. 0.25%. It's a big yield differential there. So the dollar is still leading the pack in terms of one of the stronger currencies. You're seeing the pound, say, under pressure at the moment. Pounds had started their rate hiking cycle already. Really soft data coming out of the UK last week. Maybe that's going to put on hold any imminent follow-on the rate hike. So maybe you're seeing the Bank of England maybe hitting the pause button on that, and that's reflecting in the British pound at the moment. You're seeing the Australian dollar, the Canadian dollar, both under pressure. In fact, also the New Zealand dollar, all the commodity currencies under a bit of pressure. This is clearly a case of risk off, and that's why those currencies are struggling at the moment. This red line here, that is the Swiss franc, another safe haven currency. That's been pushing up. Pretty much in tune with the Japanese yen. So as a trend follower, if you want to have an edge in the market, following trends, you clearly want to buy the strong currencies and sell the weak currencies. So if you're looking at this, and I do think it's crucial that you understand where the currency flows are at the moment, if you're looking at this, then you'll be seeing that the stronger currencies, these are the ones that should be bought, the yen, the Swiss, and the dollar, and you're seeing these weaker currencies down here, the ones that should be sold for trend continuation. That's what we like to do. So I know a lot of traders like to look at the DXY. Now the DXY is the dollar index. It's basically the dollar against 6 of the major currencies out there. The DXY here, you see it in the top left. So the dollar, if I just expand that out, you see the dollar has been on a big move higher. This is the 4-hour chart at the moment, almost out there on no man's land. We haven't seen it up there for many moons. So we're seeing basically dollar coming into a bit of strength at the moment. Let's have a look at the weekly chart to see where this can basically hold back. Okay, so it really goes back to around March 2020 when we had the dollar so high at the moment. We are now just a small 50 pips away from what I think could be a level where the dollar is going to show some signs of resistance. Okay, so I like to look at the closing price. I'm looking here, if you look at my crosshairs, we saw at 101.93 where that weekly closed, I'd say back in March 2020. Only 50 pips away from there at the moment. If you are buying the dollar this week, be aware of that level on the index because, as I say, you may find some stalling of that strength of that currency, especially now that you're seeing the yen take hold as well. And indeed, the other currencies, such as the euro, you'd expect to see the euro on its knees. Actually, the euro is holding up quite strong. The DXY is one way of looking at it, but also you can look at the other indexes as well. So this is like the euro index, pound index, Japanese yen index. Well worth looking at. This is the euro index. Okay, so this is the euro, and you'll see here we've just broken through some support, but it's been reasonably stable. Look at this movement here. Okay, this is, let's just go out to the daily. Okay, so despite the fact that the dollar has been really strong, the euro hasn't really tumbled as much. So it just shows you that the euro on a basket of currencies is actually looking not too bad at the moment. Okay, so just going again out to the weekly here, we are coming into, as you would expect, a big level of support in tune with the DXY, which is just about, well, what is it? It's about again about 50 pips away from the moment, almost the reverse of the DXY. And you see the pound, as I say, pound is weakening up at the moment. This is the pound index. Okay, so that is coming under some pressure at the moment. Pound is weakening, soft data, as I say, out of the UK. We're coming into some support, possibly for the pound down there at around the 96.75 zone. I think it's really important to be able to look at these levels on the index if you're trading the individual currencies as well. And there you go. You've got the commodity currencies, the New Zealand coming under pressure as well. Quickly looking at the Japanese yen. We know the yen has been weak for the last few weeks, but we are staging a bit of a recovery in here at the moment, and the yen is going to be finding resistance, I would have thought, in at around this level here. Okay, so not far from where we are at the moment. So the yen is kicking off the week, but again, if you are now selling the yen crosses, that basically means you're buying the Japanese yen, then you may be looking at just a bit of a resistance coming in not far from here at the moment. Okay, so I do this exercise with you every week, basically drawing support and resistance. If you are looking to get your win-loss ratio up, I think this is a really good exercise that you should do preferably ahead of the trading week. Perhaps maybe you can do this on a Sunday if your family permits. It's basically drawing in your key levels of support and resistance on the higher time frame charts, say the weekly and the daily, and not taking your trades if you're trend following if your profit target has to be through one of these levels. Just sit on your hands and perhaps do nothing. That is a way to get your win-loss ratio up. Just basic support and resistance on the higher time frame charts. And I'll show you how I always do that. I always like to use the line chart for this. The line chart basically ignores the highs and the lows of a particular time period. In this case, of course, it's the daily. Just looks at the closing price. So here on the TradingView platform, you just go up there to the candle and select the line chart, and I'm just going to plot in my key levels. Anything where you have a big A shape like that, or a big V shape like that, or levels that have been inspected more than once, are levels that I think are crucial for this. So I'm going to basically pop one in there. It bounced off it a couple of times, 1, 2, 3 times there, 4 times in fact. So this is a key level of the British pound against the euro, euro against the pound. We've obviously got one down here as well. Okay, and I am going to pop one in. I'm actually going to pop one in at this level here. Okay, because this is where the descent stalled back of autumn of last year. So it's bounced off it there, big bounce off there. We put in that double top. Put one up there. It's not going to get up there this week, but it's worth having it in there. And it's been respected a couple of occasions. It rolled off it there as well, and a bit there as well. So this is a good level. That comes in around the 84.60. But if we break through there, we're looking at the next level up there at 85. So as I'm saying, if you're looking to trend continuation and you're getting into 84, sort of 85, 84.90, are you going to take that trend continuation through the 85? Perhaps you should sit on your hands and sit that one out and take only the high probability trades. When you go back to the, I'm going to put one in there as well before I go back to the candlestick chart. There you go. I'm going to pop one in there as well. Bounced off it there, bounced off it there, bounced off it there as well. Back to the candlestick chart, and it'll show you, I think, with a bit more clarity. Now you can do this, as I say, on the daily and on the weekly. Maybe do the weekly in a different color. And I suggest you do this on a Sunday to avoid that forward bias. You know, in trading, we want to remove the emotions as much as possible. So doing this when the markets are closed ahead of the trading day sometimes can help you with the emotions rather than saying, should I, shan't I, in live environment. Have it mapped out beforehand can really help you there. Let's have a quick look at the economic calendar for the week ahead. Okay, so head over to the ForexSignals.com website. You scroll right down to the bottom here. You'll see all our tools. You hit on to the where is it? The Forex economic calendar. Click on there, and then you can just click view calendar. This is today. Anything that's deemed to be high impact news is going to be color coded red down here on the right. That's basically Bank of Canada governor speaking later today in 5 hours 50 minutes. If you're trading the loonie, then obviously you need to know what the Bank of Canada is thinking about, and that's obviously why it's deemed to be high impact news. Okay, and anything in low impact news is normally in green, and medium impact is in yellow. The estimate is down here in this column here. If it comes out better than expected, then it will be coloured green. If it comes out worse than expected, it would be coloured red. Okay, so that's basically where we are at the moment. Let's have a look out for Tuesday. Excuse me, you might hear the pug there in the background. He's snoring away. That's not me. Right, okay, so we've got some durable goods here out of the US tomorrow. That's an interesting piece of data. Durable goods basically is your white goods like your washing machines and your high ticket items, the ones that you normally only buy when you're comfortable about your household income and so forth, and your job prospects. You don't go out buying new white goods if you're worried about losing your job necessarily. That's why that's deemed to be important. So we've got that. It's been a quite week actually on data fund. Let's just go out to the next 7 days. We've got CPI out of Australia as well. If you click on the news release, it tells you a brief description of what that release is and tells you how it could affect the currency pair, so it gives you a bit of a clue here. A low reading is seen as negative or bearish. There you go. There's everything in there as well. Inflation running at 4.6% year on year. A lot less than we're seeing out in the UK and the US, of course. Right, we've got Lagarde speaking as well. She's speaking midweek. And what else we got? We got trade balance. I say quite a quiet week. Bank of Japan rate decision is, I guess, the key takeaway this week on the 28th. That's going to be interesting to see what their forward guidance is like. You know, we know that they are negative interest rates, and they've been really suppressing the 10-year bond yield by buying their bonds. We'll see what the rate statement is and their forward guidance. Very important at the moment, I think. Certainly when you look at all the other interest rate yields all edging up, and the Japanese yen just pretty much flat at the moment. Japanese press conference. So that could be a deciding week for the Japanese yen. As I showed you a moment ago on the momentum meter, the Japanese yen is kicking the week off in positive territory. When we got jobless claims at the end of the week. So that is the week ahead. It's quite a quiet week in terms of economic releases. So I think it's a good idea to know what is coming out so you don't get caught out. But as I say, quite a quiet week. Go and check it out, ForexSignals.com. Okay, so if you found that useful, don't forget, if you want to put your details in there on the landing page, ForexSignals.com, we'll send this directly to your email inbox. At the moment it has been released. Now, if you want to come and join us here at ForexSignals.com, you can do so. We are streaming live up to 6 times a day now, around the clock, covering all time zones. Just head over to ForexSignals.com. You take out a 7-day free trial. If you don't want to stay, you don't have to. Now, don't forget, you can follow us on all the socials. Don't forget to subscribe to the channel here on YouTube if you don't already do so. And that bell notification, well, you know what that's all about. If that's not your thing, you don't want to join us here in the room, that's not a problem. I'll see you next week. Have a good week.